a blowout quarter, 62 cents a share of earnings, more than $33 billion of revenue, both numbers beating the average estimate on Wall Street by a wide margin. Gary Bradshaw is a portfolio manager at Hodges Capital Management in Dallas. His firm owns about 200,000 shares of Ford. So, Gary, the easy question to ask here is, on the basis of these numbers, do you think you'd like to own more Ford shares?
Well, I sure do, Eric. Ford did have a great quarter this morning, and I still think we're in the early innings, the second or third innings of a recovery in the auto sales going forward. And Ford is without question the automobile manufacturer that I want to own. And even in spite of having fuel prices increase 25% over the last 3 months, their numbers are excellent. And I think that Ford will continue to build on that momentum going forward. So
with the stock trading right now in the pre-market at about $16, maybe slightly north of that, $16.10, $16.12, would you guys at Hodges be inclined to buy more Ford shares today?
Eric, I would. If you take a 2-year time horizon and look out, I think, like I said earlier, we're still early in the cycle, and we'll see earnings north of $2 this year. But if you look out a couple of years, we could see earnings $3 plus, and at that level, I think Ford would be an excellent buy at today's prices.
Okay, so what stock price would reflect in your mind the intrinsic value of Ford and its potential to earn those kinds of per share figures?
You know, if they earn $3 a couple of years out, you put an 8 multiple on the stock, and you'll end up with a $25 stock price, and I think that's very much doable. Even you know, you look at the higher fuel prices today, that, you know, could stymie sales if they go up dramatically, but I think the consumer is still out there spending. There's a lot of pent-up demand for cars. We all have more miles on our cars today, and you just can't drive them forever. So I think car sales are going to continue to grow. Consumer confidence is up. Unemployment picture's getting better all along, and I just think the demand for cars is still going to improve.
So that suggests to me that you think this, more than anything else, is going to be a revenue story, that people are going to continue buying more hybrids, for example, and they're going to continue to turn to other Ford cars that offer some decent fuel economy, and not so much a margin story, more of a revenue improvement story. Is that correct? Well,
yes, it's going to be revenue, but as you saw from this quarter, Ford had great margins as well, and today 25% of their cars are in the small car segment that you just mentioned. So Alan Mulally and his team have done a great job of being extremely profitable, and I think that's going to continue.
Gary, if there's one thing Mulally could do better at Ford, what would it be?
Well, he's doing all the things right at the moment, Eric. I just think, you know, to talk to investors going forward and leading them along a little bit better. You know, they stumped their toe in the fourth quarter, had investors hyped up quite a bit, but I think he's learned to tone that down, and I think he is the best manager there is out there, and I don't see a whole lot of fault with what he's doing right now.
Well, Gary, thanks for joining us to talk about those Ford numbers. The stock is up 3.5% in pre-market trading. Gary Bradshaw, a portfolio manager at Hodges Capital Management in Dallas.